Thanks for tuning in to this week's news recap. First headline: NYDIG is bringing 24 million people direct access to Bitcoin. 24 million customers across 650 banks will soon have access to trade Bitcoin on their mobile devices. Michael Del Castillo of Forbes reports that NCR, an enterprise payment giant, and NYDIG, a digital asset manager, have partnered with community banks and credit unions across the country to give clients access to cryptocurrency trading services directly through mobile applications. As part of the deal, financial institutions do not have to directly hold cryptocurrency and deal with the subsequent regulatory hoops. Instead, institutions can opt to have NYDIG as their crypto custody provider. Partnering with NCR marks NYDIG's fifth collaboration with a financial services provider since the start of 2021. The firm has already announced similar deals with FIS, Fiserv, Q2, and Alchemy Technology, bringing Bitcoin directly to many customers at those institutions. Next headline: NFTs are back. Maybe they never left. On Thursday, Animoca Brands, a company that provides digital property rights through NFTs, announced a $139 million raise that values the company at $1 billion, hinting that big money still has interest in the NFT market. In fact, NFT headlines just kept rolling in this week. At Sotheby's, an NFT of the original World Wide Web source code sold for $5.4 million. All proceeds from the sale will go to initiatives supported by Tim Berners-Lee, who developed the code. Christie's also sold a large NFT collection this week, auctioning off a set of tokens from Fowocious to the tune of $2.16 million. The collection, says the blog, was inspired by an 18-year-old artist's experiences as a young transgender artist growing up in an abusive household. On Thursday, Mintable, an NFT platform, raised a $13 million Series A, seeing participation from Ripple and MetaPurse. Mintable is looking to double its workforce thanks to the influx of cash. CoinFund also set plans to launch Metaversal, an NFT investment vehicle. Vanessa Grayer, head of portfolio growth at CoinFund, told The Scoop that there is still so much demand for NFT exposure. She added, "Even though you see a slowing down in the consumption, I think we are going to see a lot of tools around lending, around the financialization of NFTs that are going to make the NFT space even larger than other spaces like DeFi, etc." Next headline: Coinbase unveils plans to expand. On Monday, Coinbase CEO Brian Armstrong took to Twitter with a bold statement, tweeting, "Our goal is to list every asset where it is legal to do so." Armstrong's tweet thread made it clear that Coinbase is, quote, asset agnostic and believes in a free market with consumer choice, emphasizing that a Coinbase listing is not an endorsement of a token. His tweet came after the exchange added Polkadot, Shiba Inu, and Dogecoin within 1 month. Based on a report from Decrypt, Coinbase has aggressively picked up the pace of its asset offerings. In 2020, the exchange only added 21 tokens. So far this year, the company has already added 29 new tokens. Coinbase's custody division has also expanded, announcing support for 74 additional tokens, more than double the number of assets available to custody on the platform in just 6 months. This week, Armstrong also posted a blog announcing that Coinbase wants to, quote, become the place people also go to actually participate in the crypto economy by building what he called the Crypto App Store. He hints that the first step in building a crypto app store is allowing users to self-custody in the main Coinbase app. In addition to expanding asset listings and app store plans, Coinbase debuted a crypto savings account offering 4% APY on USDC. Next headline: Bitcoin's mining difficulty could drop 25%. According to data from blockchain.com, Bitcoin's hash rate, its measure of computational power working to secure the blockchain network, has plunged to 90 terahashes per second, the lowest it has been since May of 2020. Hash rate has been on the decline since mid-May, coinciding with the first rumblings of China banning Bitcoin mining. With hash rate plummeting, Glassnode estimates that Bitcoin's mining difficulty could drop 25% during its upcoming adjustment, marking the largest such drop in history and the first time since 2018 that Bitcoin's mining difficulty dropped 3 times in a row. The adjustment is set to occur roughly around when this podcast publishes, Friday, July 2nd, at block 689472. Glassnode reports that Bitcoin miners who stay operational during this turbulent period of hash rate migration will most likely, quote, become even more profitable over the coming weeks, as mining equipment that would have become obsolete remains online and effective due to a global shortage of semiconductors and the amount of hash rate power in transit. For miners who've been shut down, Glassnode speculates that there could be massive sell pressure coming from two areas. First, a decline in mining revenue due to the Bitcoin price falling 50% from its peak, and two, logistical expenses and risk from relocating or liquidating equipment may necessitate the sale of BTC to cover fiat costs. Next headline, ARK Invest files for an ETF. ARK Invest is throwing its hat into the Bitcoin ETF ring, according to a filing with the Securities and Exchange Commission. If approved by the SEC, the fund would trade under the ticker ARKB on the Cboe BZX exchange. ARK Invest is partnering with 21 shares to launch the ETF. ARK is joining 8 other ETF applicants, including Fidelity, Galaxy, and NYDIG, among others. However, it appears the SEC is in no rush to approve a Bitcoin ETF application. In the past 2 weeks, the regulator has postponed its decision on Valkyrie's and VanEck's Bitcoin ETF filings. Next headline. Crypto markets were the talk of the house on Wednesday. Cryptocurrency was the main subject of conversation during Wednesday's U.S. House Committee on Financial Services hearing titled America on Fire. Will the crypto frenzy lead to financial independence and early retirement, or financial ruin? The block reports that much of the discussion featured a comparison between the financial crisis of 2008 and the current state of the crypto markets. 2 other bits of regulatory news. The Financial Action Task Force delayed the finalization of its draft guidance until October. The draft guidance, if implemented, could have a massive impact on DeFi and self-hosted wallets due to its strict language surrounding VASPs, or Virtual Asset Service Providers. FATF's guidance also includes the travel rule, which would force VASPs to transmit information to each other for transactions over $3,000, a rule that would significantly hamper many decentralized applications. FinCEN released the first iteration of a document titled Anti-Money Laundering and Countering the Financing of Terrorism National Priorities, which identified 8 priorities, one of which was, quote, relevant virtual currency considerations. The agency plans to issue regulations to specify how financial institutions should incorporate the priorities into anti-money laundering programs at a later date. Next headline. Robinhood files for an IPO. On Thursday, Robinhood, the popular and somewhat infamous stock trading app, filed for an IPO with the SEC. The company aims to raise $100 million and plans to trade under the ticker symbol HOOD on NASDAQ. The S1 filing shows massive growth for the company, which has more than doubled the number of accounts on the platform and tripled its assets under custody in just 1 year. According to the filing, crypto trading made up 17% of Robinhood's Q1 revenue, which totaled $522 million. This is up from 4% in Q4 of 2020. Notably, a big chunk of that growth came directly from Dogecoin, which accounted for 34% of the firm's crypto transaction revenue, meaning Robinhood made roughly $30 million for being a meme middleman. The company's S1 filing comes in the same week that FINRA hit the trading app with a $70 million fine for, quote, systemic supervisory failures and significant harm suffered by millions of customers. All right, time for fun bits. The B word. Mark your calendars for July 21st because Elon Musk and Jack Dorsey have agreed to discuss Bitcoin with each other at an event titled The B Word, though the event is not yet 100% confirmed. As usual, Musk's acceptance of the invitation was somewhat odd. Here is the back and forth to end the pod. Here's Jack advertising the B Word conference. The Bitcoin development community above all else. As more companies and institutions get into the mix, we all want to help protect and spread what makes Bitcoin open development so perfect. This day is focused on education and actions to do just that. Elon, bi-curious? Oh, right, Bitcoin, haha. Jack, bizarre. Let's you and I have a conversation at the event. You can share all your curiosities. Elon, laughing my fucking ass off, OMG. Jack, let's have the talk. Elon, for the bit curious, very well then, let's do it. Wink face. Jack, done. We'll set it up. Based on the two CEOs' Twitter back and forth, it sure looks like July 21st could be quite the event. All right, thanks for tuning in. To learn more about Sam and FTX, be sure to check out the links in the show notes. And heads up, everyone, the Unchained newsletter has switched from a weekly news recap to a daily blog in order to keep up with the crazy pace of crypto news. Each morning, you'll get 4 to 5 quick headlines, a crypto meme or two, and a few recommended reads. Head to unchainedpodcast.com or to my Twitter profile to sign up. Unconfirmed is produced by me, Laura Shin, with help from Anthony Yoon, Mark Murdoch, and Daniel Ness. Thanks for listening.